Wait, it's very hot. Like, what's going on? Okay, so for today's session, right, I have a short presentation that just want to update on current market situation because I think it does deserve an update. It does deserve an update. Look at the market. Look at the weekly candle. four weekly candle in a row. One is bigger than the next. This one tiny, then bigger, then bigger, then bigger, then bigger. And this last week was like, what is this? This is like truly a rejection candle, and it closed red. I was like, I mean, even though I'm a bear, right? I was hoping, okay, like close green a bit, like give chance, maybe we can get another round of relief rally, but no. In fact, Nasdaq is worse. Look at Nasdaq. Oh my God, I think we are officially in the bear market already. Okay, there's no denying already. There's no denying already. So before I go through the presentation, right? Let's just quickly go through some basic minor stuff now. Okay, some update. This week not so much. I got the S&P 500 trade, the long trade lah. So okay, so this trade very simple. I'm sure you all know. I entered here 280 and then hit the TP within the same night, and then the next day gap down to 4270. The TP was at 4300 lah, but when the market opened the next day, it gapped down at 4270. So instead of exiting at 4300, right, I exit right at the opening lah after I saw the gap down. So it was at 4270. So it was quite sad because I saw like $3,000 plus profit, and then the next day the $3,000 profit become like 2,000 plus like that. It was such a big drop. Okay, so I got the S&P here, S&P 500 here, just to show you the close position. Rivian is still the highest. Here, no, not that one, the other one. SP 500 2,867. Actually, initially it was like 3,000 plus lah. And then there's no new entry. I got Whirlpool. I mean, aside from Whirlpool, right, there's no new entry. I shorted Whirlpool the same time on the same day that I posted out. And aside from that, right, other current position, a few pool corporation going well in our direction. Although yesterday it kind of like recover back a bit, but always like that lah. Let the trade be, okay. Don't go and catch out anything. Of course, Fastenal finally diving down. Let's look at Fastenal. Our Fastenal trade finally diving down, but it did somewhat recover a bit also. It didn't go all the way to the bottom, but this is still very bearish lah, okay. This is still very bearish. Who knows, maybe Monday might go up again, but don't bother so much. Let it be. I think this is like a lot of room downwards lah. Although a little bit more slow moving, right? A lot of room downwards. And then I'm still waiting for a Facebook short. I will look at it tomorrow. I think it is good to go in already. You can see that yesterday, right? Facebook was among the laggers lah. Most of the tech companies somewhat managed to rebound towards the end, and then some become positive. Apple became positive. Some were like -3%, -4% initially, but they managed to recover lah. But Facebook is still at -2% lah. So I think this one losing steam already lah. Okay, maybe we might be able to short right here also. The stop loss level is quite good enough. I will share also. So currently, if you notice, right, I have added 2 more short position, and that 2 short position they are in different industry. Okay, one is in electronic appliance, consumer durable. The other one is in tech, if you consider Facebook as tech, technology, service, internet, software. So one thing you need to be aware of, don't short all the tech counter out there, because suddenly if tech recover, right, your entire portfolio is gone case ready. You want to split between different industry a bit, okay? So I will go through more of the counters later. Let's go through the PowerPoint presentation. Wait, let me share a different screen. Okay. So it seems like we are in a very bad market environment, which is good for us because we are mostly net short. We are still net short. Okay. So but of course, going forward, since we TP most of our short, like Amazon TP ready, Rivian, Starbucks, most of all this stuff TP ready. So we will re-engage our shorts again to see what else we can enter. Okay, of course, we are not going to enter all those stuff that has dropped so much. We will enter something new. For example, if you look at Whirlpool, both Whirlpool and Facebook, right? They do have one thing in common. They have very bad earnings, very bad outlook, but the price actually gap up. The price gap up. So it is like giving us the opportunity to short higher. Okay. And let's say if the market continue to rally, do a relief rally, right? Maybe this counter might not rally as much as the rest of the stuff that is still fallen very, very low. Okay. So this is more of a general presentation on what the market is going on. So far, I have been mentioning bits and pieces here and there, like during our Friday session, Thursday session. But since the Saturday session is where most people view the recording and most people come to look, right? I'm going to share it officially here. Okay. So 7th of May. Now we are going into almost like half of 2022 already. And market is like at all-time low for this year. Right, this year market is at its lowest right now. Yesterday, closing price was actually the lowest for the entire year. And if you want to recover back to positive for the year, right, I think it is going to is an uphill climb. And every single macroeconomic indicators are not pointing towards a recovery. In fact, there's literally no catalyst for market recovery aside from shock covering or aside from a relief rebound, a technical rebound. There's nothing fundamental that is pointing towards a recovery. Okay, so please be mindful of that. Our position have not changed. Any rally is a sell, and we are still going to be very careful about trying to catch a counter trend dead cat bounce kind of trade because I would say we are pretty lucky in the S&P trade that we got last week, mainly because it went up 3-digit before it fell back down 3-digit, and it gave us plenty of room to exit even at break even. But in the future, we might not have such luxury. No, the screen haven't hang yet. I haven't even begun yet. Okay, let's start. So a very small joke. So they say that diversification is the key, but when market crash, right, even your defensive sector, whatever that you think is considered defensive, they will crash as well. Your consumer staples, your utility, your healthcare, everything will crash as well. So in a way, diversification is losing money in 10 different ways instead of one. So the current market headwind, reason to be short, or why is the market currently behaving the way it is right now? So first point, we have a 50 basis point hike on the federal fund rate. Okay, so initially it was at 0.5%, and last Wednesday they hiked it by 50 basis points. So currently it is at 1% now. And what you need to understand is that this 50 basis point, right, it is considered a historic hike because Federal Reserve have never done a 50 basis point hike since the housing crisis. Okay, ever since 2007, 2008, they have only done 25 basis point. And the thing is that 50 basis point in current situation right now, it is actually required because our inflation is at 8.5%. And 8.5% inflation is like way back in 1981, that kind of period. Okay, it is like truly unheard of. And another factor is this 50 basis point hike, which we have not done since housing crisis. We are hiking into a negative Q1 GDP. US have a so-called surprise negative Q1 GDP. And then after that, they are giving all sorts of reasons why the GDP is negative. And then they are giving this reason, that reason, mainly because they are like the export fell a lot, but they are still importing a lot because all the ships stuck outside somewhere. The funny thing is, if you have all the ships stuck outside that cannot boost your export, right? It is not like suddenly the ship, everything stuck. If it's stuck, right, it has been stuck there for very long, so it shouldn't be a surprise, okay? So there is a lot of other factor that is causing the negative GDP. It is more than whatever they are trying to downplay the whole thing, and like Biden was also saying things like, nah, I'm not gonna care about this, blah blah blah, and they have reason to downplay the whole thing because election is coming up, and for Biden, right, I think his his approval is very jialat because he have every single issue that's gonna hurt his election. He have the highest inflation. He also have this Russia-Ukraine conflict, and now he have a negative Q1 GDP, and the market crash. So there's nothing going for him. There's truly nothing going for him. I mean, it is not his fault, it's just that bad timing, okay? Very bad timing. But there was at one point, he was like Yaya Papaya, like Hao Lian on media, that like his term, like his capability as a president is the best because the stock market is at all-time high right now. He was trying to like sort of diss Trump, because Trump keep mentioning that the stock market is at its highest, so he is the best president, blah blah blah. But I mean, spoken too soon, okay? Now things are very bad. And the next thing, the 10-year Treasury yield is at 3.1%. The 10-year Treasury yield is very important because it is the most liquid Treasury yield. Okay, we always look at 10-year Treasury yield. It is known as the benchmark yield. Every single thing that is related to interest rate in the world will look at US 10-year Treasury yield. Okay, and it is at 3.1%. Just earlier this year, it was somewhere around 2% plus only. Now after 3-4 months later, it is at 3.1%. So if your mortgage rate is going up, it is because the 10-year yield is going up. If your like credit card interest rate going up, is because of the 10-year yield. If any rate going up, right, it is because of the 10-year yield. Okay, so this 10-year yield is very bad. Also, it is causing your 30-year mortgage rate to be at 5.27%. Of course, this is the US rate, and that is 2008 high. It is the housing crisis that level. Imagine that. And AAA corporate bond yield is at 3.74%. It was at 2.1% during January, meaning a lot of corporate are having a very, very tough time borrowing money already, and it's very hard for them to grow. That's why a higher yield, right, usually result in stock prices falling. Okay, usually sometimes they will decouple, but in this case, it is exactly that. Next, the dollar index is close to 2002 level, and it's like it has been very, very strong for the entire of 2022. And strong dollar is bad for corporate earnings because majority of our the US corporate factories, everything, it is based overseas. Trump tried his best to bring all the jobs back, but I mean, like Elon Musk is still building gigafactory out in China, in Germany, a lot of Apple's production are overseas also. And because of the strong dollar, right, they want to ship back all the profit back to US, right? The conversion rate is very jialat. Next, the CPI at 8.5%. This is your inflation. Inflation is bad for corporate as well, mainly because their expenses increase also. They need to pay higher wages. And not only that, a lot of the expenses increase. So usually, right, they can pass down the inflation cost to consumers. If you are wondering why now one tray of egg is like $4 plus, last year it was like $3 only, it is because of this. Okay, so everything is going up. Every single price out there is going up lah. But the thing is, when come to discretionary products, right, like non-essential items, consumer can just choose not to buy. So if the company raise the price, we can simply choose not to buy lah. That's why one of the industry that is crashing the most right now is discretionary. Okay, all those stuff that no one really need, all the non-essential item. And you have to also understand, inflation is at 1981 high, but GDP is negative. So this is a stagflation. Next point, China lockdown. So if China is locking down, who's gonna buy Apple? Who's gonna go into the Apple store? Who's gonna drink Starbucks? There's a reason why Starbucks is falling. Okay, and you have Tesla and Apple production, which is mainly based in China also. Next point, Federal Reserve reducing the balance sheet. So when Federal Reserve reduce the balance sheet, right, this is money supply removed from the economy, which could be going into stock. And they have also stated how much are they going to reduce. They are going to start in May. And for Treasury, right, they're going to reduce 30 billion a month. And after 3 months, they're going to reduce by 60 billion per month. So they give us the rate ready. So everything related to balance sheet is being priced in. So stock market is not going up or down because of balance sheet ready. It's already priced in. Same thing for mortgage-based security. It's going to reduce by 17.5 billion per month. And then 3 months later, they are going to reduce it by 35 billion per month. So similar lah. So unless Federal Reserve decide to change the rate, they feel that market crash ready, maybe they cannot keep reducing the balance sheet so much, and then they just come out and say that okay, we're not going to reduce the balance sheet ready, then market can rally up. It will trigger the market to rally. But at the stage it is right now, balance sheet stuff is over, everything pricing ready with regards to balance sheet. Next, the big tech earnings. The big tech earnings are weak, and sometime in early April, we have the luxury to say that, okay, maybe market can rebound because the earning haven't out, earning confirmed strong, this and that, and market can rebound because Federal Reserve meeting haven't come yet. But now earnings are out, and the earnings are not good. In Q1, we have Netflix and Facebook diving, and now Amazon and Google have joined the fail boat lah. They are together with Netflix and Meta right now. Apple is on very thin ice. Okay, only Microsoft seems to have good result, but it is still being pulled down by everything out there lah. Okay, Microsoft is part of the index, part of the same index as Amazon and Google. So when Amazon and Google get sell down, the index get sell down, right? Microsoft also gonna sell down, okay? And lastly, there is weakness in consumer spending, because with food prices, gas prices going up, the rent prices going up because of the mortgage rates going up, right? Your everyday consumer like us, like me, like you, all the average Joes, all the middle income, lower income people, all those who earn less than 300K per year, according to Bloomberg, inflation is going to screw us lah. Okay, if you're gonna spend additional $1,000, bro, wait, relax, relax. You don't want to short things against the price action. There are 1,001 things to short. You don't need to short our class. There is a lot of other things that we can short. So everyone is going to cut on unnecessary stuff, and our class is all the upper income people lah. All the rich people that are not affected by the inflation. But if you have all the middle income people trying to yaya papayas, like swipe the credit card on a Rolex, then those are different lah. Okay, those are, I don't know lah. So imagine every month your expenses went up by $1,000 because suddenly your gas is up, gas prices are up, food prices are up, your bill is up, your rent is up, right? Then this increase in all these bills, right, means there is less money to spend on everything else. So if you need to start saving, right? Yeah, rich man will still buy, correct. If you need to start saving, right? The kind of expenses that you will start to cut is all the stuff that you don't need, discretionary stuff. That's why discretionary companies are already falling, okay? Shopify, look at Under Armour yesterday. Did anyone look at Under Armour or not? It's ridiculous. Look at Starbucks. Who's buying Starbucks right now? Like if your rent so high, who's gonna spend that money to buy Starbucks? Foot Locker, Rivian, Amazon. Who's buying online now? Wayfair, Home Depot, Chipotle, all this counter already dropping. Okay, these are things that you can see, not say look. Okay, there's a reason why we short Rivian. There's a reason why we short Amazon. There's a reason why we short Starbucks. We wanted to short Foot Locker, but it just jumped down from the building before we managed to get in. But we were looking at it. Shopify, I was looking at it. That there wasn't a safe entry, but it still dived down anyway, okay. So is there any reason to be long? Yes, there is reason to be long, and that reason are technical reason. Number one, market is at support. Number two, market is oversold. So we should have some dead cat bounce, okay? But don't go and anyhow buy the dip. So the next thing, the post-COVID, we have all the travel, resorts, cruise, gym, all this thing like going out. A lot of people asking airline can buy or not, this and that. Like all the gambling counters, blah blah blah. Home Depot, I think you can, maybe you can. We will look at individual stock later, okay? We will look at individual stock. let me finish this first. This is like Friday is the analysis part, okay? The request part. The Saturday is more of I thought you listen, okay? But we will go to that later. We'll go to that later because we truly do not have enough time. So if there is any rally in terms of airline travel resort cruise gym I believe it is short-lived because if the consumer already are going into trouble with mortgages, high food and gas prices, right? Who's going to travel? Who's going to go to the gym? They are going to cut those first. So maybe now there is still some spending power. There's still some last drip of spending power. People can still travel a bit here and there, but there will come a time where the Federal Reserve hike the rate to from now is 1%, right? Become 2%, 3%. The mortgage goes up to 7%. Then all these counter gone already, okay? So if you are thinking about buying some airline counter at the resistance there, you might want to think twice. Shorting sector, a lot of shorting sector that we can look at. The home builder sector, home furnishing sector, home improvement sector. There will be reduced in housing demand once the mortgage rate goes to 6 or 7%. Currently, it is at 5.27%, but the federal fund rate is still at 1% only. They are going to hike a lot more. So when the federal fund rate went up to 2-3%, right, you will see the US 10-year Treasury yield shoots up, the mortgage rate gonna shoot up, and then that's where you see all the home builder counters starting to drop left and right. We already have short position on most of them. So short position on counters like Pool Corporation, Builder First Source is something that we have mentioned week after week after week after week after week. You can look at that. If you want Home Depot, right, you can also go for it. But you are still not late. You are still not late. This sector is still in the early stage of the fall. We will look at some of the counter later. You can still enter, not late yet. So don't miss out. Don't miss out. If you miss out that and then after fall by 50%, you come and find me and say, hey, store still can short or not. I will ignore those kind of message already. And next, the discretionary sector, shits that you don't need. Okay, your electrical appliances, like if your rice cooker not spoiled, no one is gonna buy a new one. They're gonna try to keep using until cannot cook ready, then go and buy. Okay, so does anyone know of a electrical appliance counter that we shot recently? Anyone? We just yes, correct. Whirlpool, nice, correct. Thank you. Apparel is all your shoes all your Nike Under Armour Foot Locker like no money, like busy paying rent, no money buy Air Force One already, okay? Or any shits that you don't need to survive The third, the trucking sector. So when the consumer demands go down, a lot of the transportation will have lesser demand, especially when buy Bata. In fact, I was very surprised that Bata is listed. It was don't know how many years ago I saw Bata listed. Yeah, so when your home builder, all these stuff start to go down, right, you will realize that there's gonna be lesser demand for trucking also. Currently, trucking sector is kind of like rebounding, but they will go down soon. Just let them be. Okay. Then any tech companies that make revenue from ads, small business transaction, or retailer transaction. Okay, so these are your buy now, pay later stuff, Grab, and all your brokerages lah. You see Robinhood, no money ready, how to trade. You see Tiger, Futu, Coinbase, Western Union, all this kind of stuff. Shopify, Wayfair, Amazon. So anything to long? Yes, we do have things that we can long. Currently, energy is still very strong. We have the liquefied natural gas still going up. Coal is still running up. Like you see, the what's that? Golden energy is still running up like crazy like that. And last Friday, the energy sector hit all-time high. Not all-time high lah, but it hit the 52-week high. And I also have reason to believe soft commodity and fertilizer will continue to go up. So maybe you can still consider long in this sector, which is why I'm still holding my Archer Daniel Midland. I'm still holding LNG. Bungie also quite a good counter to look at. And maybe I might want to see some fertilizer counter can long or not. Because, for example, Mosaic actually fell by quite a lot, but then it recovered 8% within a day. So we will look at those counter later, okay? But energy, right, I put there dangerous. Later I will explain why. Because if a recession were to occur, right, you will see most of the whole oil prices will start to crash also. So peak inflation. So if inflation is the one causing all this thing, right? Does it mean that if inflation have peaked, when inflation start to go down, is it a good thing? Is peak inflation a good thing? No, it's not. It's not a good thing. Actually, it's a bad thing. If we have peak inflation, right, it means that consumers are no longer able to keep up with the rising prices. They will simply stop buying anything aside from survival. In fact, inflation is still a sign that consumers still have the spending power to buy. That's why inflation keep going up. But if the inflation peak already, right, it is the turning point already. Okay. So in some cases, right, if they are in such a bad situation, they may be forced to default on the mortgages. So peak inflation will cause many companies who are surviving by passing down inflation expenses to consumer, right? They will start to crash also. That is when you will see even the defensive counter, the so-called defensive, those stuff that you cannot do without, they will start to drop also. For example, you will start to see Costco, Walmart, Coca-Cola, Colgate, Target, General Mills, all this counter will start to drop also. So when they start to drop, right, it is a sign of peak inflation, and it is probably a sign that the next big crash is coming. So there will be a huge drop in global demand. And when there is a huge drop in global demand, right, eventually oil price will fall also, which will lead the recession. So that is where ONG counter will start to crash. So I'm a little bit scared of going long on oil and gas counter. That's why I'm long on soft commodity, and I'm thinking to long on fertilizer also. I also have long on LNG, liquefied natural gas, but liquefied natural gas usually goes hand in hand with oil and gas, so a little bit dangerous there. But you don't want to like buy 2 or 3 energy counter, okay? Make sure buy one enough already. So why are we in this situation? We are in this situation mainly because of Federal Reserve money printing in 2020. We have a historic amount of money printing that occurs in 2020, way more than what is needed to prop up the economy. And we have historic inflation without any form of economic growth. Prices are going up due to short-term spending power from the stimulus, corporate expanded too aggressively using cheap debt from the 0% interest rate, but they are unable to turn a profit. So right now interest rate have gone up, they are still unable to turn profit. So how are they going to survive? Look at Peloton, look at Palantir, look at all these meme stock that were aggressively promoted in TikTok lah, Facebook lah, now all suddenly gone already. Okay, then all the money printing have also gone into stock with zero capability of making earnings. Shopify now dropped until don't know where already, and they are still negative earnings. Look at Rivian. Like they just recently made revenue. For the past 1 year, they did not make any revenue at all. They didn't even, all their cars are still prototype, and their market cap is like third behind Tesla, Ford, and GM. How ridiculous is that? The stimulus is now gone, but prices are still soaring. The salary cannot keep up. So if you are the kind that, hey, why my salary never increased, but my bill all increased, it is because of this. So who fault is that? It is Jerome Powell's fault because he used his tool very poorly. And it's also compounded by increase in soft commodity and energy prices due to the Russia-Ukraine conflict. So Putin actually know what he's doing. He actually picked the right time to invade. And all the unnecessary sanction is actually hurting US consumer more than hurting Russia. And Russia is very happy because all the Euro nation is still buying natural gas from Russia using some loophole, and they are still paying him in rubles. And India and China are still buying a lot of stuff from Russia. And you have all these corporate pulling out from Russia, right? Look at Netflix with all these subscribers gone from they are already doing very bad already. Now it's even worse. Then who is actually hurting? All the Netflix investor. Bill Ackman is hurting. He lost like 400 million on his Netflix trade. That's why don't pick the bottom, okay? Don't be a hero, pick the bottom. Bill Ackman have million to lose, but you probably don't have million to lose lah. And it's also because of Jim Cramer. He keeps saying market at bottom. Each time he say market bottom, right? Market dives some more. So when Jim Cramer say market is now bear, then you can start buying already. So the summary is that the Federal Reserve action that caused the historic V-shaped rally, right, in 2020, it is also the cause for current market drop. Without that much money printing, right, we will never have that rally. And if we never have that rally, right, market will not have dropped so much. Okay, so if you have made a lot of profit back in 2020, but you give back everything now, right, then you might want to reconsider your strategy lah. So how can we prevent this? We can prevent this if the Federal Reserve can reduce inflation without aggressive hike, aka the softish landing, the soft landing. It can't be done lah. So it really can't be done lah. Okay, and there's a reduction in food and energy prices. So there's still no possible peace solution to the Russia-Ukraine conflict. I think it's still ongoing. There it's been don't know how many. I think we are into the third month already. And even if they come to a peace agreement, right, the sanction is not gonna immediately go away. They might take a lot of, like, a few more months to get all these sanctions back to normal. And all your corporate that pull out of Russia, right? Do you think if they suddenly go back in, they will still get that same level of demand? No, like now all the China product, all the China handphones are going into Russia already. That's the other time I made a joke that if Russia start using WeChat, you will see Tencent price hitting all-time high. I mean, that's a joke lah. Don't go and bottom pick Tencent, okay? And next, OPEC is not gonna hurt their economy by increasing the oil supply lah, okay? So currently we are still going to see very high oil prices. So what's the most scary thing about this whole thing? In 2020, there is a record rise in retail trader. I have never seen so many retail traders in my life before. Previously, if I want to trade, the hoops and loops that I need to jump through are like so complicated. I need to wait 2 weeks because my signature got one extra dot there on my CDP, and my brokerage, the signature doesn't match, and then need to wait 2 weeks, and then the fund going need to wait 1 week. Now you just sign up for account, within 1 hour you can fund ready. Retailer trading platforms are made easily available. Tiger, Mumu, Robinhood. And Tiger and Mumu have been, even Robinhood, they have been doing very aggressive marketing. Like you pull one people in, you get free Tesla stock, you get free Apple stock, but now they are making a lot of loss. Now instead of Tesla and Apple, I got GoPro stock, which I sold yesterday for $7. Like before I sold, the GoPro price crashed like 20% some more. So it's like it's damn funny, like it's damn funny. Okay, and retailer participation as its highest is due to aggressive marketing, but not only that, there's a lot of complacency from the 2020 bull run. Every single trader out there think trading is easy because of that bull run in 2020 due to the Federal Reserve money printing. Like you buy what also make money. Like suddenly everyone think they are the best trader. And what happened now is it's a calling lah. It's a calling to badly put it. Okay. So there's a saying, stock market crash is the cure for inflation, because a crash in stock market will remove 90% of the retail trader from the market. And all these retail traders who lost the money, right, who lost all this money in the trading that they have been doing without any knowledge, don't know what to do, anyhow trade here, trade there, lose a lot of money. Because of all these big losses, it will reduce demand across the board. And ultimately, it will reduce inflation because everyone lost so much money in the stock market. And if you look at Robinhood, Coinbase, Tiger, Futu is for Mumu Holding. If you look at the stock prices of all these four counter, they are mainly targeting retail trader, okay? If you look at the stock prices and the revenue, right, the income statement, you will see that the revenue generated by retail trader on this platform has been reduced drastically already. Like market bad, price drop, a lot of retailers start to lose money, they are not going to trade anymore. And look at Robinhood price, Tiger price, Futu price, and Coinbase price. They are currently at like all-time low. They have fallen like 70-80% from the top already. It is already happening. So who are the winners? The winners are the crook CEO who sold their shares at the market top. So this is the article on 1st of December 2021. There was a record insider selling, 69 billion. Nice, just nice, 69 billion. So who are the people that selling? Elon Musk, Tesla, Zuckerberg, Facebook, and the Satya Nadella from Microsoft, Jeff Bezos from Amazon, and a lot more. Okay, so the winners are also Nimbus Capital follower who understand what's going on, and you have been shorting since February 2022 lah. I have prepared you to short ready. Okay, so hopefully with this presentation, right, you understand what's going on. You are not clueless, and don't go and anyhow buy the dip. If you buy ARKK on the dip, right, you deserve to lose money. Okay, so stop buying the dip. So with that said, right, let's go through some of the counters that we have mentioned, and let's look at all the stuff that we can trade. Now let's look at S&P first. Hey, what is this? How come the chart so different? Okay, the opening price different lah. Okay, so S&P, right, it does seems like it is being supported at 4100, kind of like. But if you look on the weekly, right, this is not the kind of candle that you want to be playing long position into. So if I were to see a green color closing at the top here, right, or maybe even like somewhere here, it eat into the previous day candle, I would feel a little bit better lah. Then again, right, it is truly oversold. It is really oversold. Maybe there can be a relief rally, but I highly doubt that the relief rally will go to 4300. So maybe I might want to reconsider trying for another dead cam bounce, but we see how okay, we see how on the Monday. But as it is right now, you can see that one day go up 3 digit, next day come down 3 digit, right? And we were lucky enough to get off here. Or if you were unlucky, hopefully you managed to get out at your break-even price. If you decide to double down on your losing, I think that one you better not trade lah. Okay, that kind of action is not suitable for trading. It's a very emotional action. So we might have some support at 4100, but due to the volatility of the market, right, we want to be careful a bit. And if you look at Nasdaq, right, it's even worse. Nasdaq, there wasn't even any form of like day end rally. Like towards the end of the trading session, there was a bit of rally, but not as much as S&P 500 lah. So the reason why Nasdaq seems to be performing worse is because Nasdaq is all tech counters. It's all tech counters. At least S&P have some financial and industrial counter, which sometimes tends to hold up the market. That's why they tend to be not as volatile as Nasdaq. But when market crash, right, Nasdaq actually dropped a lot more than S&P 500. So the technical definition of a bear market is if the stock price have dropped 20% from the high, we are officially in a bear market. So Nasdaq is actually in a bear market already. It has been closing below the 20% price for quite a few days already. But S&P is like, I mean, is not really that better. Also, is gonna hit there already. Okay, it's at 15% lah. It has another 5% more to drop lah. Okay, to be considered a bear market. Of course, Dow Jones seems to be hanging on the most because Dow Jones is all the mature company like Microsoft, McDonald's, Coca-Cola, Johnson & Johnson. So it is also known as the boomer index lah, mainly because all those counters has been around for very, very, very long time. These are names that I think many older generation people will be familiar with lah. Okay, so that's why when we trade, right, we tend to trade S&P 500 because it is somewhere in the middle. It will move enough to give you profit. Oh, sorry, I mean, when we look at index, right, we generally look at S&P 500. And if we decide to trade index, we'll also pick S&P 500, mainly because it is in the middle. If it moves, right, it will move enough for you to earn, but it's not going to be very volatile like the Nasdaq also lah. And Dow Jones is just too slow lah. Okay, so normally I don't touch Dow Jones. And S&P is usually the better barometer for US market, mainly because of the growth counter, and the growth counter are quite spread across finance and tech, but there's a lot of tech, but at least there's some finance component to it also. So banks are quite a big part of S&P also. So it is a better barometer. It is growth. If all the growth counter are going up, right, the economy is growing. Dow Jones is like everything mature already. Like you cannot detect any growth in the Dow Jones lah. Okay. So before I go into individual counters, right, Germany. So for those who have access to German index shorts, right, you can consider shorting also. I think this one, if we think US economy is bad, right, German is even worse lah. Okay, so I think German gonna drop quite bad soon also. So you can consider German DAX short lah. And Singapore market gap down, going down. So this one, as early as here, I want you guys be wary of gap up. Is sooner or later it's gonna go down, and it's like no surprise go down already. And if you have by any miracle have access to STI shorts, right, you can consider also. You can consider Singapore STI shorts also, but it might be only available on CMC through STI ETF, or if you have POEM or Vickers CFD, right, you can actually short STI CFD lah. So please go and research and go and find all those stuff. Okay. So just now I was talking about all the 10-year yield lah, all those stuff, right? This is the AAA corporate bond rate currently at 3.74. You can see that we are at like this level already. We are at this level already. If the federal fund rate go up again next round, right, it's gonna shoot up, and then we are gonna hit like the housing crisis level already lah. Look at this going up. Meaning, if you are a business owner, you want to borrow money, you will see the interest rate suddenly goes up very high. And we also have the 30-year mortgage rate, 5.27. We are at 2008, 2009 level already. This is no joke. And we have 10-year Treasury yield at 3%, at 3%. At this, like a bit more, it also going to go to the 2008, 2009 level lah. Okay, and US inflation at 8.5%. This is like 1980. I wasn't even born yet. Okay, so these are all the stuff that I mentioned through just now also. So let's look at some individual counters that we mentioned just now, and we can kind of like look at. So the long stuff, let's look at the long stuff first. Soft commodity. So you have two counters that you can consider. Archer Daniel Midland, which I still have. Actually, it rallied so much already lah. It has rallied so much. But our initial entry was here, and then we have a second entry here, and now it is hopefully will U-turn back lah. Okay, so there's a reason why I'm still holding this counter, because it is one of the rare long position that you can hold in this kind of market. And in fact, as early as February, when the entire tech sector was crashing, right, this counter was shooting up lah. Okay, and if you don't like Archer Daniel Midland, you can actually go for Bungie Limited. They are somewhat the same. And it is currently at the like retracing. So don't go and buy it. Don't go and buy at the retrace. Okay, wait for some bull candle come out, and then you can like put your stop loss there and then go for it. Or if you want to wait for the breakout also can lah. But I think one bull candle that a break above here, I think this is good enough lah. And the fertilizer counters, CF Industry and Mosaic, right? You can see what I mentioned about Mosaic. I think it has bad earnings. It gapped down and then suddenly showed up like 8-10% like that. And we have a support level here lah. Okay, so this one I'm kind of looking at this counter. Recently retraced due to the market movement lah. Hopefully it can go back up lah. So I will be monitoring this, and if there is a possible entry, right, I will go through. Chem Eco, unfortunately, good earnings, but price in fact, price actually fallen quite big already. We have entry here, and I actually call for an exit here lah. Okay, I actually call for exit here. So hopefully you manage to exit without eating the earnings price lah. And Treasury Energy, LNG, doing very well recently. Glad to be holding, but of course it is like somewhere at our entry price. It's a bit flat, but I mean hopefully can go up some more lah. Okay. And Chevron, we have shorts. Unfortunately, we have shorts because last time we were betting on oil price dropping, but now oil price is going up. So this one, since we are already very near the stop loss, right, we can consider just like hold until stop loss, then just get out at the stop loss lah. And some of the two energy counter that showed up, Occidental, the one that Warren Buffett bought, and EOG Resources going up a lot also. So all these energy counter, right, I'm a little bit hesitant to buy them because of what I mentioned just now. If suddenly the economy crash, if the demand is suddenly gone, right, all these oil counters will start to come down lah. So you have to be very careful also. Next is Peabody Energy. This is coal. So coal is doing very well also. Recently, we have Golden Energy from Singapore going up, but this one have retraced by quite a bit. The earning was bad, this and that, blah, blah, blah. But normally for energy counter, right, the earning bad, they also go up one lah. If you look at Chevron, right, all like the earning miss here, they miss earning here, they miss earning here, but it's still shooting up left and right. Okay, so for Peabody, right, I am looking at this also. If I want to long, right, I would rather long a coal counter, but let's see how lah. Let's see how it is seems to be supported, and hopefully we can get a fast get out on this trade lah, if we can lah. Okay, so I'm monitoring this also. Alcoa is aluminum, so this one unfortunately came down already. So I'm not sure what's going on with this also. The earning was quite okay. The earnings was quite okay, but the support level broken here lah. So I might not want to look at this to bottom pick lah. Okay. And yes, you have the home builder, home furnishing, Home Depot, whatever you want. So I have mentioned a lot of counters that you can short here. Like you want to short this also can. You want to short I think Pukop if you want to short here, right, your stop loss should be somewhere already lah. Your stop loss will have changed lah. Our initial short was here, and our stop loss was like somewhere here lah. Okay. So let's look at Home Depot. Sorry, I like to keep my things tidy in their own respective. Okay, Home Depot actually broke down here. So if you want a short, right, you can actually short. It's okay. You can go for this, and then your stop loss probably above this consolidation lah. Okay, somewhere above this consolidation. I think, I don't know, maybe this one can go to 275, 250. I think it can drop some more lah. I think pool is slightly late to go in for the short because you can't really get a stop loss ready. You will want a stop loss above this thing lah, okay, above this thing here. But at the current price, right, it is a bit far. So maybe Home Depot might be a better choice. Builder First Source is also still a good choice. They actually rebounded a bit. You can kind of like place your stop loss somewhere here and then take the write down. And DR Houghton also actually slowly coming down. And you can see if it breaks, right, if it start to give you another bearish candle, you can actually set your stop loss like maybe slightly above this cluster also. I think it has similar structure to Home Depot. So just pick one, don't pick anything, just pick one and then you just go for it. I think it is, they are still in that early stage, okay? This is the initial drop. This the initial drop is gonna drop some more. And it's very funny when a lot of trader, when I say can short, right, they were like, oh, this one can short or not, like drop so far already, can short or not. And then the same people come and ask me whether Netflix can short or not. It's like totally doesn't make sense lah. Totally doesn't make sense. So we are talking about companies that earn money from ad revenues and all those stuff, right? Actually, Google is one of them, but I don't really want to short Google. And Amazon, we are short already. So maybe if it comes back up again, we can short lah. But one counter that is really truly prime for shorting is Facebook. Okay, Facebook, very good price for shorting. I will put up the trade setup soon. This one I will put up official trade setup, so you can wait for it. So I believe it can close the gap and go down some more lah. Next, Microsoft don't really want to touch lah. Okay, so next, the discretionary stuff, all the so-called discretionary stuff. Shopify dropped until don't know where already. We don't really want to touch that. Netflix also dropped so much already. We don't really want to touch. But Starbucks we can consider for a second round. We can consider for a second round. This price action here is very nice to short. So if we have, because next week, right, we don't really know if there's gonna be a relief rally or what. But if let's say if this start to go back down, right, we can kind of short and then put the stop loss here lah, and it will be a very nice short. You can probably go to like $70, $60. Who knows? Okay. So Starbucks is a discretionary restaurant, probably can short. Whirlpool electronic can short also. You can take both short together with Facebook short also. They are different lah. Okay, they are all from different industry. And as I was mentioning, Western Union also, for those who already have the short, congratulations on the gap down. And if this go down some more, right, you can add on to your short lah. You can like add more position, like put your stop loss maybe somewhere slightly above the gap here, but don't in the middle of the gap, slightly above the gap. I think you can take this further down, okay? So if you look at the overall chart structure on this, right, it's a very it's a bear flag structure here. It is coming down already, and you have very nice pin bar coming out at the top lah. And you also have a pin bar here. Shake Shack. Yeah, I think the other time someone was mentioning Shake Shack also. Let's look at it. Yeah, probably Shake Shack also. But in terms of chart, right, I would prefer Starbucks. I would prefer Starbucks because Starbucks is the, in terms of stop loss wise, right? Starbucks is like very easy to choose the stop loss. Like you can just choose that. It's a very nice level here. But for Shake Shack, right? I think here is too high already. Here is a bit too high already. Let's double check. But yeah, it's a bit too high already. And then here is like middle of nowhere. You can actually kena this also. So yeah, I mean it is a chart that definitely can go down some more, but it does seems like if you don't enter properly, you can get whipped out and then it will go down. Yeah, it is a downtrend chart, but we have to, I think in terms of the chart structure, Starbucks will be better. Okay, and then we were talking about some other company like Hershey company, right? It's still doing very, very well. It's one of the so-called defense stock. Okay, but when the peak inflation come, I think Hershey will start to jump down also. So it is currently still doing okay. So now the transport company recently they like kind of like ding dong there, like ding dong, like for this it went up a bit, but it is going up. Then there will be a lower high and then it will start to come back down. Okay, so if you haven't entered yet, you can wait around a bit. If you are already in the trade, relax, okay, relax. And also talking about just now I missed out fastener. For those who have the fastener put position, who is holding on to their put position, you should be like, wow, the profit suddenly gao from don't know where. So we still have a bit more, but I think even if we eventually hit the profit here, right, it can go down some more lah. Okay, so this is something that maybe I will shift my stop loss to entry and I will continue to hold this beyond the TP. But of course, I think in the short term, right, maybe it might go up a bit before coming back down again. Yeah, Beyond Meat also, yes, Beyond Meat is something that I was looking to short previously. I even make a mark there, but it is just that like that time, right, I was looking somewhere here. And then I was like a bit hard to play stop loss also. So I went for Starbucks instead. So it is one counter that I chose. That I choose. I didn't choose this, but I went for Starbucks. Okay, so just now I was talking about all the defensive counter that can suddenly start to fall if the inflation peak, right? There's no more consumer spending power, right? These are all your so-called defensive stuff like Costco. Hey, actually Costco dropped already. Costco from the high drop already. Walmart also coming down. These are your indicators. These are your indicators. Coca-Cola okay lah. Seems like surviving, but if this come down some more, right, it's a little bit scary already. Colgate kind of like ding dong the entire way. Target also coming down, lower high. General Mills seems to be okay also, but it looked like Coca-Cola lah. If it start to come down, it's very bad already. Okay, then look at Robinhood. Look at that. All the trader no money trade already, no more revenue for Robinhood already. Coinbase and Tiger changed to UP Fintech and Futu Holding. Okay, it's already happening. All these stuff are already happening. Okay. So next, right, let's look at some of the so-called COVID recovery counters. So some of these counters are like going up. For example, Delta Airline, like wow, like COVID recovery, like don't go and buy the high here. Okay, it does seems like coming down. And we also have Airbnb. Coming down. So the COVID recovery play is not playing out lah. Okay, so Delta still doing okay, but it might straight away start to fall lah. And we also have things like gym, Planet Fitness. Nike, or your discretionary, Under Armour. Look at that, ridiculous. Under Armour. Okay, and then we also have all the resort like Win Holding dropping. We have Hilton coming down. We have the cruise all coming down. We have where is Las Vegas? I got Las Vegas here. We have SeaWorld also coming down. So all these so-called post-COVID, all this stuff, right? They are not really doing very well also. So sometimes, right, you cannot just anyhow, COVID restriction lift, I buy airline, and then you don't do any more like research really, or like the no more restriction, you can buy hotel, you can buy cruise line. Go and research a bit more and you will understand why sometimes these counter cannot be taken lah. It is like I always mention this example from people who like to make this kind of general strategy, right? It's like last time a lot of people buy high flux because everyone need to drink water. Like water is everyone need to drink water, so buy high flux. Cannot go wrong. And some of these examples is you look at Boeing and Airbus. These two companies have monopoly on the entire world aircraft production, and they are doing very bad. They are doing very bad. So it's like you can say, hey, the whole world need airplane to fly, but why are these counters dropping left and right? So be very careful of this kind of general statement to buy stocks, okay? Sometime around in 2017, 2018, I got people tell me, everyone need to use mobile plan, then buy Singtel, then end up stuck at $4 there. Okay, so next, let's take a look a bit at Singapore. Singapore, like right now, right, is really nothing there. Nothing there except for Golden Energy. Golden Energy is still going up. In fact, I'm a little bit surprised that it still got steam. I'm not sure whether this is like the last leg already. So energy want to be a little bit careful, okay? And unfortunately, Wilmar have gone back down already lah. So perhaps soft commodity play on Wilmar not very good lah. So if you are still holding, right, you might want to consider stop loss really. In fact, depending on where you enter lah. If you enter at the early part here, right, you are close to break even. So you can actually exit at break even lah. Or there was one trade setup that hit the TP here. If you manage to exit there, then good. But I think at this stage right now, if it hit the stop loss, right, I think it is a better decision for you to exit first. And let's say a few days later, it rally back again, right? You can consider re-entering lah. But of course, I mean, since you already exited, right, you might want to go for Bungie Limited or Archer Daniel Midland lah. Okay, so Wilmar, I think. I'm personally out also. I'm personally out from Wilmar already. Another one is just now Ash was talking about Hourglass. I also believe that Hourglass it is still going up. It is still going up. Where's my volume? It's still kind of like got steam. It's still kind of got steam like that. So this one just let it be, okay? Just let it be. So remember what I say about making general statement. Don't like, consumer blah blah blah, then can short Hourglass and then you don't do any more research. This kind of trade strategy is not going to work. You must really go and do a lot more, okay? So before I start shorting airline or what, I will definitely do a lot more research. I'm not gonna just simply, peak inflation, consumer spending decrease, so I'm shorting airline. No trading entry is ever like that. Yeah, then you look at all the banks, right? Quite jialat also lah. Okay, quite jialat. So Singapore, there's really nothing to enter. And if you don't believe me, right, let me show you the entire Singapore industry. There's truly nothing to enter there. Market, stocks, sector, industry. Where's Singapore? Singapore. Okay, so let's look at the sector. Let's look at the sector. Let's look at all the green sector. How many green sector are there? We have energy, mineral, very green. Okay, like, okay, see, we can enter energy, mineral or not. Let's go. So what counters do we have here? What counters do we actually have here? Nothing much. There's nothing much here. We have golden energy in the past, we have geo energy in the past, so whatever we can get, we get ready. We got Rex energy, so okay, maybe like this particular industry we can enter, and we already have a lot of profitable trade on golden energy and Rex. Okay, so don't push your luck, don't push your luck. Okay, so okay, this sector, okay lah. Retail trade, let's look at retail trade. What do we have? Metro, okay. Jardine CNC quite okay. Sheng Siong quite okay. Dairy Farm, not really. Dairy Farm not really. But the rest is like you go and look at the chart of the rest, or the rest, all cannot make it. All cannot make it one. Jardine actually recovered a lot recently. I think it is the only thing that holding up the SDI, but it kind of reached there already. Like it's kind of hit the resistance there already. How about Sheng Siong? Sheng Siong has been like stone cold stagnant. No point trading this unless you want to hold for very long. Dairy Farm. Dairy Farm rally a bit, but now coming back down already. So like you don't want to be that guy. You don't want to be that guy that like rally here, go and buy, and then think it will go back to like $13 like that. Don't be that guy, okay? How about Metro? Also stagnant. Also stagnant. So you go and come here, and then you look at each sector one by one, each performing sector. And when you go through one by one, right, you realize that there's nothing to trade except for the golden energy, Rex International, that few bunch lah. Okay, then maybe those Bumitama Agri, First Resources recently rally, but now they are coming back also. There's truly nothing to trade at all. So don't even shorts, right? Singapore counters are very limited when it comes to shorting, so I would rather short the US side lah. So a lot of Singapore counter Tiger cannot short. That's why I'm looking at US, and US short a lot. It move a lot more lah. You can get a lot more profit lah. Okay, so whenever there's something to long in Singapore, right, I will definitely pick them up. Like things like Rex International, all these, I will definitely pick them up. But if I'm not picking any Singapore stuff, right, most likely there's nothing there lah. There's truly nothing there. Yeah, iFast diving. I think there's another counter also aside from iFast. I forgot what already. Shit, market cap. Nanofilm also diving until don't know where already. It is when they come out, wow, Yaya Papaya also, the CEO buy good class bungalow already. After buy good class bungalow, the share dive already. Don't know where already. Okay, so be very selective in things you choose. Oh, even First Resources and Bumitama hit down already. Okay, so be very selective in what you choose to long. The market has still a lot of room to go down. I have picked out a lot of sector, a lot of individual counters that you can look for shorting. And when the time is right to short all those counter, right, I will definitely post them on Patreon. So look out for all those short setup. But aside from that, right, the market is not your bitch. It is not like, oh, today I want to trade, I want to earn money, and then you go and force a trade. It's not like that. You need to ensure that the timing is correct. You must make sure that you enter properly. Your stop loss is proper. You don't enter in a very peak volatility move period where you can get whipped out left and right, don't know what's going on. Okay, so you are the market's bitch. Is the other way around. So you take whatever the market give you, not the other way around. You cannot like you free, then you want money, then you go and trade. You definitely gonna you're definitely gonna lose a lot of money. Okay, so sometimes, right, when there is no trade, it is because I'm waiting that like they're like a sniper. I'm looking at all these. I'm a full-time trader. I'm looking at this every single day. Every single thing price move, you'll always see me updating those in my course group. You will know lah. Like every tiny movement, I will update here, update that one. Okay, so the best way to make money is know what's going on, be patient, don't force it, don't like very eager like that. Relax, like calm down, and you will definitely get a lot of profit. Okay, so let's see if next week if we can do any additional live session, because I'm not sure how I'm not sure how volatile market is gonna be. I think S&P will probably still remain volatile. Okay, so stay safe, everyone. Stay safe. Don't YOLO stuff. We definitely have a lot of trade setup, just waiting for the right time. So hopefully maybe May will be as hot as April if market decide to crash some more okay. And if market doesn't crash, it is just simply giving us a better shopping price at the relief rally Okay, guys, have a good night, everyone. For those who are coming for my course tomorrow morning, sleep tight. Okay, big day tomorrow, big day. We are coming to the climax really. Bye bye, everyone. Good night. I will be hanging around if you all have any like question that you want to ask, right? Because just now like a lot of things to share so you might not have the opportunity to ask. So you can ask I will try to answer your question. Thank you, Megan. Thanks, Ed. Welcome, sleep tight. Russell 2000 I think a bit late already, a bit late to short already. You can wait for a rebound You can wait for a rebound. Where's Russell 2000? Okay. Wait for wait for a rebound. You don't want to short into this kind of price movement. Okay, maybe I want a stop loss here. I want a stop loss there, but it's like a bit hard. It's a bit hard. Maybe here. Yeah, so maybe if we can get a small rebound, we can put there If not, if it dies some more, right, then we short lower, then we put the stop loss here. Okay, but right now it is like want to rebound, don't want to rebound, don't know doing what like that. So we don't want to get caught. We wait for a few more weeks, and then you remind me again. Okay, you remind me again. Let me just put a color here so that I got like pending item. How inflation gonna affect? It's the other way around. It is the commodity and agriculture price that is affecting the inflation, because your commodity agriculture sorry, my bad. You were referring to the share price. Okay, so all these commodity and agriculture, these counters, right, they are going up because they are able to sell whatever they are selling at a higher price and because there is a global shortage, right, all these counters that you see like Bungie or Archer Daniel Midland, these are US counter, these are not Russian counter. And if majority of the supply is coming from Russia, like your wheat, your fertilizer, previously they are supplied by Russia, but now due to the sanction and all this, right, we are no longer coming, our source is no longer coming from Russia, so it has to come from somewhere, and that somewhere is the US companies like Archer Daniel Midlands or Bungie or all this stuff, right? So they will probably get a huge increase in demand, which will cause their revenue to go up, and they will be able to get better business. In fact, Archer Daniel Midland have a very nice earning result. It is just that maybe price have gone up too much. It is retracing a bit. Okay, so it is mainly because of all this It is because of the sanction. Golden Agri Golden Agri is a slow moving counter. What's your entry price? What's your entry price for Golden Agri? Sakura advocating. Okay, so what are you dollar cost averaging? What are you dollar cost averaging? if you are an investor, I mean, I'm also advocating the same. If you are a long-term investor that is investing, that's going to invest for 20 years, and you have unit trust, you have SPY, Vanguard, or whatever, all those good stuff, quality stuff, then you continue to dollar cost average. You continue to dollar cost average, because like every 2-3 years, right? Every 2-3 years, the market is gonna get a shock. There will be like some kind of sudden market crash. Like you see here, you look at S&P, currently the previous shock was here, 2016, then the next shock was in 2018, then 2020, and then now 2022. So does it mean that every 2 years you want to clear your portfolio? Cannot be also, right? So if you're gonna invest for the next 20 years, right, just dollar cost average monthly, or your unit trust, your SPY, or whatever. You don't care about all this. But here's the thing. Let's say you are stuck in Palantir, you are stuck in Facebook, and then you want to average down, dollar cost average down, because you hope that market can recover, and now your back holder, you want to get out at break even. Those are a big no. Okay, those kind of dollar cost average is different. Those are not dollar cost average. Like I can tell you story about friends or friends' mom who dollar cost average Sembcorp Marine from $4 all the way until like 19 cents. Or those creative shareholder from $20 dollar cost average until $2. So it depends on the kind of dollar cost average you are doing. Okay, if you are talking about dollar cost averaging a single company, one particular counter that you are stuck, you bought at the top, I will not recommend those unless you are able to do very, very good fundamental analysis. If you are just like blindly dollar cost averaging because someone say market recover, then that is on you lah. If you dollar cost average into that and it still go down some more without doing any research, right, then of course that is on you lah. Most of the time index like S&P, Dow, STI, these are all a good target to dollar cost average lah. So for those, I think it's fine lah. Someone asked me, can dollar cost average up or not, because he was stuck here. And I was like shaking my head. I wanted to tell him, you take your loss, take out all your money, and then you dollar cost average into SPY. I think it's better. Okay, let's go back to golden agri. If you are an investor, right, you truly have nothing to worry. If you are dollar cost averaging index, just continue dollar cost average, because you're not gonna sell everything every 2 years because market decide to jump down 20%. It's gonna happen maybe in 2024, 2025, something will happen also, and market gonna dive like 10-20%. This is very, I would say this is very typical golden agri move lah. Like you can see the original price. The original price here, and you look at the way it goes up. It's like it's always make people very like want to run like that. You see this, and then go up, and this, then go up, then this, and then maybe it might go up some more. So it is normal lah. This is typical golden agri movement lah. Okay, so if you see your profit here and then suddenly all the profit disappear, you might be a little bit disheartened, but is how the market, is how golden agri move lah. I mean, I can't say that you can still hold and then next day it come down. It can definitely happen also, but what I can tell you is this is the normal movement golden agri is making. It is not those abnormal movement where you need to get out fast. It's not that kind of movement. But if you see your profit evaporating, you scared to hold, then that one I don't know lah. Okay, but this is normal movement lah. But it did break out here though. It did break out here and it's kind of hanging around there. Did you TP partially, or are you holding on to the full position? Full position. If you are holding on to the full position, right? I mean, this one, what I usually do lah. Okay, what I usually do is I set my stop loss to entry, break even price, and then if come back down there, okay, law, no profit law. I mean, I'm fine with that lah. I'm fine with that. But if not, I just like keep holding it until wherever it runs up to lah. Because like it does look quite strong on a weekly candle lah. So now you have to consider, are you willing to exit at break even? And in return, right, maybe you have a good chance of this thing going up some more. So it is always a question of, can you handle the risk or not? You cannot have both lah. You cannot be like, oh, I want profit, but I cannot handle the risk. Then that's not trading really. It is those kind of movement where we see in counters like golden energy. Where's golden energy? Always very hard to find. Like initially, golden energy also you can see how the price movement is. It's like it's not very pretty. It's not very pretty, but eventually it just shoot all the way up, and it can be that situation lah. Hey, sorry, this is UOB. Yeah, correct. I got picked. I was showing the correct counter. But I think this is quite a climb, because this counter move 0.5 cent every tick, and it's like at current price about 20% really, and at the peak 34%. quite again. Golden Agri is the first counter that I traded. It's the very first counter that I traded. And in fact, when I first trade this counter, I went for a short. In fact, I went for a short right here. I went for a short right here, and then I exited here with like 9K profit. And it was a lucky profit. And then after that, I become Yaya Papaya, and then I think trading very easy. And then after that, I start to lose like 10K, 20K. Those were the early days of trading. But if you look at monthly candle, look at this. It's like I mean quite bullish. Quite bullish. Like inverse head and shoulder. And then it is currently being previously support, resistance, now support. Hopefully supported lah. Okay, guys, I'll be ending the session already. So thanks for coming. I will upload the video tomorrow. I will get it processed today and then upload it tomorrow lah. Okay, guys, have a good night.